We'll go into the main topic now. And these are the basics that we're going to talk about: understanding businesses, researching stocks, understanding financial information. I may not delve in that too deeply, and talk about risk management, investing goals and plans, the different kinds of stocks, and how you can invest through RSEC. Before I do that, I want to just launch a poll here to see what level of investing experience everyone has. If you can take a few seconds just to click the buttons there so I can see where everyone's at. Few more seconds. Okay, I'm gonna end the poll now. So these are the results. 60% of you have some investments, which is great. So that means you're doing something towards your financial future. 35% no investments, and some of you, 5%, invest regularly. So it's all good, whichever level you are today. I'm hoping to help you out, learn new things or further your education in terms of your investing. So moving on quickly. Oops, there you go. So the basics of investing, at least in my view, in our view. So the first thing you always have to look at is your own personal situation. Okay, starting at the top there, financial literacy. How much do you know about saving, investing, and the like, right? Can you manage your own budget at home? Your bank account, your checkbook. Very important when you start investing. Equally important, your financial capacity. Do you have the funds to invest? Where are you going to get these funds? Are these excess funds that are available for investing, or is this your life savings that if you lost it, it might be the end of the world for you, So very important to understand these things. Your investment experience, we just went through that. Most of you are, I guess, beginner investments in general. Your risk appetite, your investment objectives, very important. These two we'll talk about extensively in the next few slides. You also will need, have to look at your personality, your lifestyle. Do you like eating out a lot? Do you like watching movies, shopping, and things like that? All of these things will factor into, your investment objectives in the end. So it's very important to first assess your own personal situation before investing in anything. And by the way, the things I'm talking about today are not just for stock investing. I mean, some of these rules and the guidelines I'm going to talk about can be used really for any kind of investment, not just stock market. So next thing we have to look at are establishing our goals and defining our risk management plan. Very important. Risk management is one of the keys to this whole thing. Before that, so what are goals? Just an objective or a milestone that you want your money to cover at a specific time in the future, right? So sample of goals, and if you've ever bought insurance from anyone, you've probably heard all of these terms before, right? But so you want to buy a car, you want to buy a house, you want to start a family, you want to travel. These are some of the life goals that you have to think about and decide what area you want to really concentrate on. On the financial goal side, you want to create a retirement fund. You want to reduce some debt that you might have. Do you want to earn dividends and passive income, find more income streams? So these are just different types of goals that are out there. There are many, many more. Each one of us probably has a completely different goal than the one sitting next to us. So it's not a hard and fast rule. These are just kind of ideas to open your mind and open your eyes to, to what's out there. So all of us will have different goals, and all of us will have different risk levels. So going to risk, it's the most important part of any plan or strategy, and it's more important than picking the right stock, right? So risk management, first thing you got to think about before even buying a stock. So everyone has to be realistic about their risk appetite. It's very easy to say, I can handle this much, I can handle this much loss, 10, 15%, 20, whatever it is, until it actually starts happening in real life, right? So even before you start investing, you have to be realistic about the level of risk you're willing to take and how much money you are willing to potentially lose. Okay, let's not think about gains first. We think about the other side before thinking about the gains. So you got to create your own rules, and these rules will help you not panic when things are volatile the way the market is today. Over the last week and a half, the market's been steady, 6-7 days of declines. The past 3 days, it's going up. We're not sure how long that increase can last. Maybe tomorrow it will go down. Who knows? We have to wait and see. But this is why you need to create rules, because your behaviors can be contained and can be repeatable, so that you don't make mistakes, you don't act irrationally, and you don't get emotional. Emotion is probably the biggest reason why people lose a lot of money. They freak out, they panic, they sell when they shouldn't sell, they buy when they shouldn't buy. So it's very important to keep your emotions in check. And more important, to have these rules in front of you. And that's why you need to, I jumped one slide, but you need to write all of these rules down, right? So first, focus on the process and not the price, right? So focus on the rules you're creating, how you're going to use the rules when you invest, when you trade. So setting your goals, your plans, building and following those rules, as I just mentioned, and just building the good habits, right? I'm not saying that, even in my case, sometimes I break rules myself, and it happens. Again, we're all human, right? But at least you can go back to your rules and look at them and see, where you went wrong. So always write your plan down. As they say, anything that gets measured gets done, right? So when you write something down, you have the plan in front of you, you have your guidelines. It's something that you can use to keep you, your blinders, looking forward and not getting distracted by all the news and all the noise. Okay, so here are some basic rules that I've used, and they might be helpful to you in the future. So number one, and I mentioned this earlier, define your risk level before you start trading. Never enter a trade before you know where you will exit. I have many clients, so they buy, bahala na sa whatever price will sell. They might not feel it tomorrow and they sell. They might wait a month, but there's no definite target. So always know what that target is. So have your exit plan even before you enter. So you always focus on how much you can lose on the trade, not how much you can make, right? The making will come later on once your systems and your plans, you use them constantly and really follow them to the letter. Set your position size. So basically, this just means how much you're going to invest in each stock or in each company, right? And again, see, you'll notice a lot here that we talk about worst case scenarios, how much you can lose, right? But your position size, again, should be based on the worst case scenario for you. So when you invest, you're already thinking about any potential losses and where you can cut those, right? And the size of your position will, of course, determine the size of your gain or loss in the future. So don't base it on hope or predictions or opinions. Should always just be on the worst possible scenario for you. Your entries and exits, just pick and sensible prices to come in and out of the market. It's almost impossible to time the market, meaning coming in at the lowest point of the day or the highest, selling at the highest point of the day. It's almost impossible. So again, very important to have your entry and exit points clearly defined in your plan, right? So stop loss. Stop loss is basically just a price point where you will cut the position if you were wrong about the trade. So you decided to enter a company, a stock. You had news that you thought was accurate. Turns out the news is wrong. Stock starts going down. Where's your stop loss, right? So you buy at, let's say, 10 pesos. Is your stop loss at 9.90, 9.80, 9.50, 9? It depends on everyone. Each one has a different risk tolerance, but it's always important to have this stop loss in mind. And later on, and I'm getting ahead of myself here, but later on, we'll talk about our platform, which we are currently upgrading. Today, our online platform has no settings for stop loss, but our future platform, which we hope to launch sometime in June this year, will have the capability to set stop losses within the system. So you won't need to watch the stocks anymore. You just enter your stop loss level, and if it hits that price, the trade will get executed, right? So stop loss first, find that right level, then set your position size based on that price level. And then, well, this goes without saying, you always want to win more than you risk, of course. So again, constructing your trades through proper position sizing and stop losses. And this 1% it's a kind of a rule of thumb that's always written, and when you read things in books. But again, the 1% of your trading capital for a single loss is arbitrary. It really depends on, again, your risk level. Me personally, I'm somewhere between the 5 and 10%. But I've been doing this a long time. So maybe as a beginner, you might want a smaller level in terms of, when you're getting out of a losing position. So usually 1 to 2% of your total capital is the level where you will be setting your stop loss. Okay, and then very important, once your plans, you've been able to execute on your plans, you always want to do trade analysis. It's something I never used to do, but I've been doing a little more consistently now. Really just looking at what you did right, what you did wrong, what can you change, when you entered a trade, were you thinking of other things? That's why it cost you to enter a bad trade, things like this. Always write this down if you can, because it will definitely help you in the future. It will improve your systems and allow you to look back at where you made mistakes. If you're not making mistakes, great. But definitely if you're making mistakes, you're losing on your trades and finding yourself taking a lot of, or your stop losses are getting hit a lot, trade analysis will something you want to be looking at. Okay, so if you do set your rules properly, there's one of 4 ways this should come out for you. You either come out with a small win, a big win, a small loss, or break even. You should never end up with a big loss. So try and avoid those big losses by setting your stop loss limits before you start trading. Okay. All right. So now let's get into some research. And I believe this to be true. The difference between the successful and unsuccessful investors is the accuracy of the information behind the investment decision. And so much more true today because there's so much noise, so much fake news. Yesterday, I don't know if you followed it, there was a tweet about Mega World that the BIR was going to shut them down. The stock dropped almost 10% within a few minutes. And then within another few minutes, Mega World clarified that they had resolved the issue with the BIR, and the stock ended up closing for the day, I think 2.8 or 2.9% up. So huge swing, about 12% difference between the low of the day and where it closed at, right? And a lot of that's because noise and the accuracy of the information, right? It in one way was technically accurate, but it wasn't the whole picture. So it's very important to get as accurate as possible information before you start investing. So how do you gather information on your own? Newspapers, which is the old school way. And that's how I used to do it when I was younger. And we didn't really have the internet back then. So we'd have to rely on the newspapers for corporate news, and that would be one day late, right? Today you have, excuse me, the internet is available to everyone. Twitter, Facebook, news sites, CNN, ANC, they're all pushing out information about companies, earnings, and all of that stuff. So very quick access, but again, need to make sure that your information is accurate, right? A third source is a company website. So all listed companies should have a website. I'll show you that in a second. And the fourth is through PSE Edge. I'll get through that in a second as well. On top of that, obviously your stockbroker or us, RCBC's daily information that we send via email to our clients is always available as well. No? So just going back to the company website is a example. I chose Ayala, and I thank my graphic designer here for probably not knowing that she plugged my alma mater there. But investor relations is the section that you want to be going to over here. And they will normally have all this information. Annual reports, financial reports, all the disclosures, stock information, so what it's trading at, what it closed at, how much shares were traded. Dividend information will be there. Different kinds of offerings, financial highlights, the presentations that they do, and companies normally do quarterly presentations. So those are all uploaded to the investor relations section of the website of the listed companies. And of course, you can make shareholder inquiries through the investor relations section. So very good source of information. Definitely company's website. If you're looking to invest in a company that doesn't have a website, red flag for me. So be careful about those. This is PSE Edge, also a very powerful website for information. All of us look at this probably first thing in the morning. And here you will see all the company disclosures. So they make announcements, all their financial reports, and we're currently in the middle of first quarter reporting season. So if you went to PSE Edge today, this financial reports section would be filled with current companies who have uploaded their financial reports. And then other reports here where you can see the information statements of the companies. Public ownership reports will show you how much, who are the top 100 shareholders, if that's something that interests you. What else? If insiders are buying or selling, they also have to report that within 5 days, and that will be in this other reports section. So if you're looking for information about a company, this is probably the first site you should be going. So you type in Ayala, and the listed Ayala companies will come out. You'll choose Ayala Corp, and Ayala Corp's information will come out. So very basic company information. It tells you what Ayala Corp does. Its history is there. You can look at, and I don't have it here, but you can look at all the names of the directors and the officers of the company. All the financial reports are uploaded, and these date back to, to when they were first uploaded. All the company disclosures, as we saw earlier, the page of PSE Edge that I showed you was a general disclosure area. In the company page, they only show the disclosures of each listed company. Okay, so you can look at any disclosure you want, dating back again to as much disclosures are uploaded here. And then dividends, you can look at the dividend schedule, the right schedule, and things like that. So just going back, companies are mandated to disclose any material information immediately, which means if they have any material information, normally their corporate information officer will go into the PSE Edge website and upload the document that can be then downloaded by you if you want that to actually hold and read that specific document. So PSE Edge, definitely one of the best sites for company information because it's very timely. You don't have to wait a day to receive the information. You can go here and as soon as it's released, you can download the information. Okay, so just going further down the research chain, now we're talking about specific companies, right? So these are normally the 5 areas where I will look when I want to look into a company. First, I want to know their business. I want to know how it makes money. I want to understand the business. It should be an easy to understand business model. You should be able to explain how the company makes money to your mom or your child in 1 or 2 sentences. And if it takes you more than that, might be a too complicated business model to understand, right? I want to also see that they sell a unique product or solution that's essential to customers, and that even if they keep raising prices, customers still keep coming back to buy that product or that service from them because it's good and it's in demand. Then I will look at the management. And again, guys, these are just a few of the areas, right? Again, I'm just trying to open your mind to understanding the process, but there are many other things that you might want to look into as well in terms of the business or any of these topics here. So the second area I'll look at is the management. You always want to see driven, leadership team, skilled. Obviously, integrity goes without saying. Passionate leaders, and you'll be able to see who the passionate leaders are if you attend some of the earnings calls or some of the annual meetings of the companies. Before, these used to be live. They would have them in a big auditorium, and the board of directors would be up on the stage in a long table, and each of them, or several of them at least, would give a speech, and you could see who were the impassioned ones and who were just up there to give the report. So you always want someone who's passionate, they love their company, they believe in what they're doing, right? And that obviously will inspire long-term growth. It promotes stable culture, and you want a stable culture because you don't want to see employee turnover constantly, right? You want to see a good management team that has longevity, that's able to execute on the plans of the company over the long term, rather than they just keep changing people and it kind of gets slowed down because new people have to learn how the company works, the products are, and things like that, right? And the last one I look at always is insiders that own a lot of stock. When the insiders, the officers, the directors own stock in the company, and that's legal, by the way, but as I mentioned, they must disclose when they're buying or selling so that the public is aware that they're doing it. But when insiders own a lot of stock, it means they believe in the company that they're working for, that they're running, that they're governing, right? So you always want to look for, and if you can find that information, how much stock the officers and directors own in that company. Financials, of course, we want to have a strong balance sheet, always positive cash flow, right? And recurring income, very important. and consistent earnings growth, preferably through organic growth, meaning their own products and services are driving their growth rather than them making acquisitions to grow their company, right? So not bad when they acquire to grow as well, but when you see a company growing through organic growth, then you know it's a really, really good, worthwhile company. Prospects is always looking at the future. So a company that can continue to grow over time. You want to be able to find a company that can anticipate and adjust to quickly changing situations. And a good example of these are the companies that were able to switch from brick and mortar business models to online business models when the pandemic started. All right. A lot of companies took a long time to adjust, create their websites so that we who could not leave our houses would be able to buy groceries or products or use their services. So you always want to look for companies that can adjust and anticipate anything that might be changing in the market. And this last one, just more of an ESG thing, responsible investing, just really looking at companies that invest back into the community, back into the company. It's not a deal breaker for me, but it's nice to see. And I think the world is moving to, this type of companies. You're seeing more and more investments in the ESG sector, right? Environmental governance. It's very important thing that's evolving now. So it's something nice to see. I don't know if I want to go through valuation extensively. I'll go through it very quickly because I think maybe this is a little over for beginners. But when you buy a stock, what are you paying for? I normally ask this during the webinars and everyone types in their answers, but today I'll just let you off the hook. Essentially, you're paying for earnings. Okay, how much more are you paying in terms of price compared to what the company is earning for every peso that it makes? Okay, so I won't go through this today. Earnings per share is normally the first metric that we look at. It tells you how much a company makes for each share that is outstanding, right? That's the starting point. That will get you to the PE ratio, which is probably the most common ratio that everyone talks about, the price to earnings ratio. So how much are you paying compared to its earnings, right? So let's take an example here. Well, since we're with RCBC, let's just use RCBC as our example. Let's go straight to 2022F, which means 2022 forecasted. When we made these slides and the market price on that day, the PE ratio was 6.4 times. So in other words, you were paying 6.4 times more for one share of RCBC than it makes on its own, right? Now, is that high? Is that low? The general market average of all the stocks is about 16 to 17 times. So in relation to the market, 6.4, and anything you see here below 17 times would be considered cheap or cheaper, right? Many other factors involved. Compared to the market, 6.4 times is very cheap, right? So it would make possibly for a good investment. And I'm not espousing any investment in any of these companies today. I'm just citing an example of how we analyze things, right? For example, East West Bank, 2.6 times. You would think that's 3 times lower than RCBC in terms of PE ratio. However, East West Bank is at that level because it's not a highly traded company, meaning it doesn't see a lot of trading activity on a daily basis. So even if you got in at 2.6%, there's potential that you might have a harder time getting your full investment out because there's less trading activity on the particular stock. So something to keep in mind also. And your broker, we can help you with that information as well. I won't go through these anymore. Just quickly, you might also see charts of companies, and charts are always based on, when you read charts, it's always price and volume. So up here, you see price movement, down, up, down, right? And down below, you see volume. And we encircle that big line there because I don't recall what the event was or what announcement was made on that particular day, but it obviously drove the stock up from 33.50 maybe to 39 pesos over 3 days, right? So volume plays a big part. So you see a one-off event here, but if you look at the volume across, in general, it's very, very low as well, right? So again, volume and price matter in terms of market movement. Support and resistances are just levels where, again, the market tends to support the stock when it hits that level. So a lot of buying may come in at these levels down here. As you can see, resistance is exactly what it means. When it hits that point, gets bangga, a lot of selling, price tends to go down. Now, just a quick note on support and resistances. They don't always have to be parallel. They can be in any shape or form, and I'll show you this. Like, I can't draw it here, but maybe I'll draw. So that might be a support. This might be a resistance. Same here, resistance and support. So just, again, it doesn't always have to be like, parallel lines in terms of support and resistance. Oops. Clear. Sorry, one more time. There we go. Okay. Oops. Okay, and then just another type of trend, moving averages. Here you'll see a 10-day and 20-day moving average. So basically, it's just the price computed over the last 10 days and what the average would be. So stocks obviously trading above the moving average line tend to be moving upward. If they're trading below the moving average line, as we see here, tend to go downward. There will be different indicators, and I think that's really a discussion for a different time, but this will trigger buy and sell events when people read charts in certain ways. Okay, so just continuing on. So now you've done your research, you've assessed yourself, you've looked at the companies, you've gone through PSE Edge, you've done some fundamental analysis, which again, we touched on very little, but maybe for a future webinar, we can do that. Now it's time to choose the stocks that you've researched, right? How many stocks are you going to buy? What percentage, thinking of your position sizing, right? What sectors do you want to be in? These are some of the sectors: banking, property, consumer, energy, telco. So if you think telcos or energy, maybe the next big thing, maybe renewable energy, you might want to start investing in some of the renewable energy companies that are listed. AP, ASEN, actually all the energy companies are moving towards a renewable model, right? But so if you think that's the future, you might want to start investing there. If you think consumer sector, now new administration, will start becoming more robust. COVID has not disappeared, but has kind of been quiet for a while. People are going out. People are now going to the grocery. School is on, and it's live school, so may baon na, right? So is that going to drive the consumer sector? you might want to make your investment there. So again, it really depends on your goals, your plans, your risk, and all of that. And each of us, again, will be investing in different sectors and in different stocks within those sectors. Right. So just different kinds of stocks with blue chips, right? These are the large, stable stocks, excellent reputation. So I guess the biggest blue chips would be SM, Ayala, BPI, BDO. The RCBC would be considered a blue chip. Growth stocks, so rapidly growing earnings and revenue. So their businesses are tending to go up, but not yet at the level of blue chips. I think one of the biggest things for blue chips is that they pay dividends, right? So there are no blue chips that don't pay dividends. However, growth stocks, because they're growing, may be using their income and revenue and reinvesting that into the company to continue their growth, right? Dividend stocks. So many investors just want to invest in dividend stocks, right? Companies that pay dividends. And I'll show you later how you can find that amongst our research, right? But they only want dividend stocks because they get quarterly dividend payments, and that's passive income for them. I won't go through these other stocks because they're not as important as the three that I first mentioned. Okay, so now you want to execute your plan. When do you buy and sell? So let's look at the buying side first. So first, when you've done your homework, right? Meaning you've done your research, you've created your investment plan, you defined your rules, set your risk tolerance levels and all of that. Only then should you start buying, okay? Now, once that's done, when are good times to enter? So when stocks are undervalued, like we saw in the last 7 to 10 days, stocks have really taken a big hit. I think last week alone, the market dropped 5.6% as a whole, right? So that is like a fire sale. So there are many opportunities when things like that happen. So just picking the right companies based on your research, talking to your broker, and you might be able to start buying then. And last one, and again, there are many other buying rules and entries and things like that. But for me, these are just the quick ones I look at. When the stock hits your buy target price, remember earlier we talked about setting your entry and exit points. So when the stock goes down to that level, without hesitation, you execute your plan, right? On the sell side, you want to be looking at changing facts. If the facts about the company that you research start to change, management, you start seeing that turnover, or suddenly their growth is declining, or you're not seeing quarter-on-quarter growth or year-on-year growth, might be a signal to sell. So wrong facts, we talked about that. When a stock hits your sell price, again, before you enter, you will have theoretically already set your selling price. So when it hits again that sell level, that target price, execute your plan. At or close to target valuation. So if you're following your broker's recommendations, maybe they will usually have a target price for a stock over a period of 12 months. So let's say the stock is with a target price of 100 pesos. It's 96, 97. You might want to start considering selling at that point. And then the last reason here, obviously the worst reason, we never want to have to sell for financial needs. That normally means bad news, but it does happen, and we have to sell. So these are just some of the ideas I want to give you for buying and selling. And then just reviewing and rebalance, which is the last of the 6 items on our list here. So you might want to do this quarterly with your broker or your financial advisor. Always look if your objectives are still being met, your allocations are intact. And if they're not, then you might want to adjust accordingly and reallocate your positions. You might want to sell some of the stocks that have run and changed your percentage of ownership, in your portfolio to a much higher level. So if you want to bring it back down to whatever, say 20% of X stock, and you're already at maybe 30%, you might want to adjust that accordingly.